This year's going to be, in all probability, another record.
Wow.
The growth of the business has been really robust. A number of factors that make that happen. First, the state and local governments, the responsibility is being pushed down on them to issue more infrastructure debt. So if you think about infrastructure, 80% of what you think about is just infrastructure is financed at the state and local government level, not at the federal level. So this has been a year where many issuers have come to market, and that's a result of a lack of, a change in the federal support from healthcare to other programs. And so we think the state and local government is going to pick up where the federal government is stepping back. And so I think it's going to be a record year this year and probably pretty robust next year.
Now, are there certain areas of munis that have performed better than others?
So, well, I think from an activity standpoint, it's been across the board.
Okay.
So you see a lot of healthcare, general obligations, which are full faith from state and local governments themselves. Lots and lots of projects across the country. I think one of the areas that's going to be most dynamic going forward is power. If you think about AI, the amount of power and data centers that are and their demands. I was speaking to one of the heads of one of the largest municipal power agencies, and he said that the demand that they're being asked for, now let's assume that some of it's double counting, is going to be 4 to 10 times what they produce right now.
So, Sean, just for the folks that don't know what you guys do, BAM insures municipal bonds, giving another level of certainty for investors.
That's correct. So we are a AA rated insurance company by Standard & Poor's, and really what we do is guarantee, different than other kinds of insurance, we guarantee timely payment of principal and interest when due. So that means if there is a credit event that would cause a default, we pay first and then mitigate later. But one of the unique things that we do, and the reason why at this point we've, through our inception, which is 13 years, we've guaranteed $170 billion worth of transactions, and we've had no defaults on these transactions. And that's really because we focus on municipal essential infrastructure, state and local government obligations, and we work with municipalities. So if there are bumps in the road, like what happened during COVID, we're proactive in working with the municipalities to make sure that they're in the best financial health that could be.
And how have munis been performing compared to treasuries?
I think that the way we look at it, it's when issuers are coming to market and what the performance of municipal bonds are. We're going to have an investor come speak a little bit later today, I think. And the relative performance has been really quite robust, and I think that's going to sort of augur into the next year.
Talk to us about just credit quality of the municipal bond market. I haven't really heard or seen or read about major blow-ups, whether it was years ago Puerto Rico or Chicago or just Illinois in general, quite frankly. We haven't really seen that too much.
So I think massive individual credit problems is not what's happening at the moment. I think what you're going to see happening, what we feel is happening, is a greater differentiation among credits. So, for example, if you take healthcare, there are lots of very big financial hospital systems, large single hospital institutions, and a lot of small rural hospitals. How they're going to be affected by what happens to Medicare and Medicaid payments, and how technology changes the way healthcare is delivered, is going to create a different sense of who the winners are and who the losers are. Would be a good example of that.
Are you expecting a slowdown by the end of the year, maybe November? Do things tend to at the end of the year?
I think you're right. I think volume will tail off in the fourth quarter. It usually does, unless there's a change in the tax law. But one of the important things that happened earlier this year was that when the big, beautiful bill was passed, tax exemption of municipal bonds really was not affected. So that enabled, at the beginning of the year, if you think issuers were trying to come to market to try to, because they weren't sure what the outcome was going to be, and then later the market environment was so favorable that they continued to participate in the market to bring their new issues to market. We'd see going forward, if interest rates continue to decline. You probably have a better idea of what's going to happen tomorrow than I do. But if you think about that effect, there'll be a greater number of refinancings as well that come to the market.